So this morning, as Shale said, my name is Adam James, and I'm a solar analyst with GTM Research. I focus on global downstream markets. I'm also the lead author on the Latin America PV Playbook, which is our newest research product. It comes out quarterly, tracks a lot of what's going on in a really quickly moving market. For any of you who have questions about this, feel free to grab me at any point throughout the rest of the day, and I can go into a little bit more detail on that. But what I really wanted to focus in on today, and especially with this audience, is kind of putting the Latin American market in context a little bit, comparing it both to the US market and what we've seen in the US market, and also in the context of global markets as a whole, to talk about some of the concrete opportunities that are emerging in Latin America and some of the drivers behind those opportunities, some of the risks. And lastly, to talk a little bit about what's next, because Latin America is still in very early days, and so a lot of the things that have worked in the past may not necessarily work in the future. We've got a few great panels that will dive into these questions in a little bit more depth, but this is kind of your crash course covering all those topics. So first, taking a look at the market in context. This is our forecast for Latin America for the next few years. As you can see here, the final numbers are still coming in, but in 2013, the Latin American market was somewhere between 200 and 300 megawatts. For those of you who are working in US markets, you know that that means that there are about 4 state markets that are larger than the entire Latin America region, which is not a very attractive statistic to start off with, I will admit. But what's really interesting about this to me is that although there was a relatively small amount of growth in 2013, it was important in a few ways, and it has laid a foundation for the growth that we're going to see this year and out through the next couple years. We saw the largest project connected in Mexico with 39 megawatts. Not only was it the largest project in 2013 in Mexico, but it was also unique in that it is selling energy into the market at 98% of the node price where it's connected. So in other words, it's not a fixed price contract. It fluctuates with supply and demand. So in that sense, at the time, it was also the first project in the world that had ever done that. We saw the distributed generation market in Mexico and Brazil continue to grow. In Mexico, it's been doubling every year, and it's going to almost double again in 2014. And that's been enabled both by technology cost reductions that we've seen globally, but also net metering regulations that were passed in both of those countries, and they have a pretty strong regulatory atmosphere in both places. We saw the Brazilian state of Pernambuco have its first kind of state-level auction for just solar energy, and it wound up clearing about 123 megawatts at around $100 a megawatt hour, which was, again, kind of the first of its kind in the Latin America region. And in Chile, we saw several projects actually get connected that were about 1 megawatt in size. And those projects, what was interesting to me about them is that they ranged from being traditional PPA projects to being merchant projects to being projects that had PPAs with short contract terms and no price floors. So a lot of really creative things happening in the Chilean market. But again, even when you add all that up, the whole market still wasn't very big. In 2014, we're expecting a lot more. The market will be around 1.2 gigawatts, and that's building off the growth that we saw happen in 2013. And so, again, to kind of put that number in context a little bit, it took the US market about 3 years to get from 200 megawatts to over a gigawatt. In Latin America, we'll see that same transition happening in only 2 years. That also means that the Latin America market this year will be bigger than any state market in the US with the exception of California. So one thing that I think also helps put Latin America in context a little bit is just comparing its early market growth to other regional markets when they were first getting started. As you can see here, this is Latin America compared to Europe, North America, and the Asia-Pacific region. And this is in their first 6 years of on-grid development. So what we're seeing in Latin America is that by the 3rd year of its on-grid development, it will exceed 1 gigawatt, which is a feat that took Europe about 6 years to do. And the reason that that's so interesting to me is that the growth that we're seeing in Latin America is almost entirely unsubsidized, whereas in Europe, obviously, it was kind of heavily incentive-driven growth. So although we're not going to get into this a ton today, I think that this really bodes well for both where the solar industry is today in terms of maturity and also in terms of where the trends are going globally. And this is something that I think we'll start coming to expect in emerging unsubsidized markets throughout the world. But because you don't get the choice as a company between investing in Latin America today or Europe 10 years ago, I thought it would also be helpful to put this in context of what's happening from this point forward in a lot of these global markets. So this is the average 4-year percentage growth of the Latin America region compared to all other regions in the world. And as you can see, Even just over the next 4 years, the Latin American market is growing at a much more rapid pace than any other regional market. The next largest one is Africa, and that number's inflated a little bit because of how low of a starting point it has. I think that this helps put the Latin American market in context a little bit for me, because a lot of the headlines get stolen, I think, in global demand by the Asia-Pacific region, right? And China, Japan, India, I mean, these are the stories that kind of come across the news desk every day. But when you look at how fast is the Asia-Pacific market actually going to grow over the next 4 years, what are the opportunities for a new company getting into that market, they're relatively small compared to what we're going to see in Latin America. And I don't know if any of you are familiar with the PV leaderboard service that we do for the US, where we kind of rank how different companies are doing in the US market. The reason we haven't been able to do that in Latin America is because it literally, it changes quarter to quarter, month to month, sometimes week to week, as far as who's in front. And what I think makes that so important for people who are looking at entering the market is that there's a lot of opportunities to enter the market for the first time and make a really big splash. And I'll get into how to do that in a minute. So now to dive into some of the specific market opportunities and what's driving those opportunities in Latin America. I think a good place to start is just with 2014 and what we're expecting to see in 2014 and kind of where that growth is coming from. As you can see here, growth is actually pretty evenly distributed between the 5 sub-regions that we've laid out. We have, between Chile and Mexico, they're about 20% each. The rest of South America, which in this slide also includes Brazil, is about 25%. The Caribbean at 21%, Central America at 14%. What the primary change here, I mean, this chart will actually look the same for the most part of the next year or two, although Central America will start to become a little bit more interesting. But within each of these categories, there's a few specific market segments that are really starting to emerge and a few kind of concrete drivers that you should know about in those markets. So in Chile, it's primarily a utility scale market, and you can break that out into 2 categories, the bilateral PPA market and also the merchant market. Chile has a big potential to have a distributed market, but they've been about to pass net metering for the last 3 years, and so we're just not holding our breath on that anymore. But once they do pass net metering, I'll be up here talking about the DG market. But so between the bilateral merchant market, there's going to be a lot of growth over the next few years, and that's being driven primarily by 3 things. The first is incredibly high installation levels, so between 7 and 8 kilowatt hours per square meter per day in some places. The Atacama Desert is one of the hottest and driest places in the entire world, and it also happens to line up with where a lot of the companies in that country are doing big mining operations, and so there's a big demand center there. So driver number 1 would be incredibly high installation levels throughout the country. Driver number 2, rapidly rising demand, especially from large industrials in the northern part of the country. And driver number 3 would be the high marginal power prices throughout the country. And so for the bilateral kind of PPA-style projects, of course, where that growth would be coming from is companies looking to hedge against those very high power prices. And for the merchant projects, we're seeing the potential to sell into the spot market and generate more than enough returns to justify financing for those projects. In Mexico, that 20% is split between both the distributed market and the utility scale market. When it comes to distributed generation, there are, I suppose, 2 categories for that. The first one would be the residential and commercial market. And in that sense, it's being enabled by net metering legislation. It's also being enabled by relatively high installation levels throughout Mexico, about 5.5 kilowatt hours per square meter per day when you average out across the whole country, and relatively high retail tariff rates for certain consumers. So while the vast majority of Mexicans pay pretty low tariffs, 6 to 7 cents per kilowatt hour, there's about 500,000 consumers who pay tariff rates that are about 22 to 24 cents per kilowatt hour. And the way that that works is that it's a high consumption tariff. So as soon as you exceed a certain threshold, you hit that tariff and it applies retroactively to all the energy that you've consumed. So there's about 500,000 customers who fall into that category. And even just with those 500,000 customers, we're seeing a lot of market growth in 2014. The utility scale market in Mexico has a little bit of a shadow cast over it at the moment. There's energy reform legislation that some of you have probably heard about that's been passed. That is transitioning Mexico to a competitive wholesale electricity market. In the long haul, that's going to be really good for solar and for solar developers who want to get involved in the space. In the short term, it's kind of chilled project development a little bit as people wait to see what are the new rules of the road going to be for developing those projects. And there'll be a lot of IPP opportunities in the future as well. We do have several projects that we think will get completed and be operational before the end of the year, but this is a market segment that we see dramatically improving as time goes on. In the Caribbean, most of that growth is coming from the Dominican Republic, and those are IPPs that are signing contracts with the local utility. Same thing being true in Jamaica. In both cases, the primary driver would be the heavy reliance on fuel oil that creates high marginal power prices there. In Central America, there's also just this need for resource diversification. They have a lot of reliance on hydropower and biomass, which are very cheap resources, but depending on how much rainfall there is, they can wind up being very expensive. In times of drought, hydropower prices shoot up. Crop yields go down, which means biomass output goes down. And in those moments, they rely really heavily on fuel oil, right? So if you're in the Pacific Northwest, this is probably a familiar story, but if you're anywhere else, it's one that you should definitely be aware of. And so although solar may not necessarily be the lowest cost renewable resource for some of those countries, it's one that allows them to diversify their portfolio and kind of hedge against some of those risks. And I just wanted to give you also a sense of who are some of the companies who are actually operating in this space. I've stuck to a list of folks who are mostly international EPCs and developers that you'll probably be familiar with. And also some of the financing institutions. A lot of these international EPCs and developers also have local partners who I haven't included up here. And the common theme throughout these financing institutions that you'll probably see is that they're mostly development and trade banks. And I'll get into that in a little bit more detail in a few minutes here. But there's been kind of a gap in terms of private commercial financing of projects, at least to date. But we do expect a few of these institutions to start stepping up to the plate in 2014, and that's a trend that will continue into 2015. So really briefly, because most of you are probably not going to get involved in the market this year, but if you're looking to where should I be paying attention to next year, the three major markets are going to be Mexico, Chile, and Brazil. Again, Mexico, the utility scale market and the distributed segment, both growing very rapidly. In Chile, utility scale segment, and then if net metering gets passed, you should definitely pay attention to the distributed segment there. And Brazil is primarily a distributed generation market, although we will see some more of these large-scale auctions for utility projects. And assuming that the prices in those are high enough to kind of overcome the tax burden in Brazil, there's a real opportunity for utility scale development there. In Central America, there's a few countries that will be having tender issuances that should definitely be paid attention to. All the drivers are the same as what I just went through, but Honduras, Guatemala, and Panama all are going to kind of have a prominent role to play next year. In Panama, there's already a pipeline that started developing. It's just kind of a question of which of these projects will get built. And in South America, you should keep an eye out for Ecuador and Uruguay. Both had feed-in tariffs that they passed before, or PPAs that they've signed before, and what we'll see next year is a lot of those projects actually getting built out and developed. And maybe, and I wanted to include these just because they're kind of potential wild cards for 2015, and I don't want to get up here next year and have people ask me why I didn't talk about Argentina or El Salvador, is Argentina and El Salvador. Both of those markets are in their own way kind of contingent on the financing atmosphere. Argentina is more of a financing constraint. Some of you may remember they had a little default on their national debt, and so there's not been as much interest in international finance coming into Argentina. Aside from that, though, it's a very attractive market for solar development. There's really strong fundamentals there. And the reason I included it here is because there's been, in a few cases, the local, municipal, and federal government kind of stepping up and providing financing for solar plants in the country. And that may also extend to some local commercial banks who do the same thing. So if that winds up being true, then you have strong fundamentals in that country and a potential to actually get financed inside. And I think that could lead to a larger market in Argentina. El Salvador suffers from a different kind of financing trouble, which is just that it is, again, has very strong fundamentals. It's going to have a few tenders, but the problem is just that compared to the other big markets in 2015 in Central America, we're just not sure how much of that financing is actually going to go there. So it's just more of a function of it being close to a lot of other very attractive markets and having there be a limited pool of capital that would be available to finance projects throughout all of Central America. The other distinction that I kind of wanted to make when it comes to the market opportunities in Latin America is the difference between the long-term markets in Latin America and some of the shorter-term markets. And just to clarify those terms as well, when I think of long-term bets, I think of past the next 4 or 5 years. Shorter-term bets would be within the next 1 to 2 years and maybe 3 or 4 years out. So what is not a long-term bet? The utility scale market in Chile, the Caribbean, and Central America are all, I have my serious doubts about the ability for those markets to extend past 4 or 5 years. A lot of that is just a function of how small the grid is in those 3 countries. And not just about how small the grid is, but the ability to connect a lot of large-scale projects in those countries. So I don't think that you're going to be able to connect 20 100-megawatt projects in Guatemala, right? And I think that what we'll see is a few really big projects early on, and then developers just start doing between 1 and 5 megawatt projects kind of scattered throughout the country. When you add all those up, you get a pretty big market over the next 5 years, but then it kind of dropping off precipitously after that. That doesn't mean that there's not going to be a market for solar in those countries or in those regions. It just means that it's not going to be a utility driven by the utility segment. The markets that do have staying power, I'll lead off with Mexico, which I think is the most attractive one, both short-term and long-term, but also Brazil. Both of those countries have really strong fundamentals, strong and growing GDP, strong and growing population, really pretty heavy needs for new capacity and new supply over the next 10 to 20 years. And also, all of those countries have an attractive regulatory atmosphere, pretty relatively strong banking sectors. So there's really good fundamentals in Brazil and Mexico for the long-term markets, both on the DG side and on the utility scale side. And in Central America and the Caribbean, there's also long-term potential for the DG market. The drivers are a little bit different. They definitely want to try to get as much of their reliance off fuel oil as possible. But there's also kind of a social driver. I mean, the need for rural electrification in those countries is a real driver. Some of you may have seen in Peru, they are trying to get 500,000 solar systems deployed to kind of increase the rural electrification in that country. And the truth there is that it's just cheaper, right? It's just cheaper to do DG in a lot of the Central American and Caribbean countries than it is to build a lot of new wholesale power plants and then extend your transmission and distribution networks and then put that back through the rate base. It's just not necessarily what they want to do. So those are the places that we're going to be looking at for the long term. So now that I've built the Mexico market up, it's time to just tear it all down with some of the risks and threats and challenges and the bad news. So these are the big categories that I wanted to talk through. I recognize that a lot of these overlap with each other and are kind of intertwined, but just in terms of kind of explaining them, I think that this is a good place to start. So the first one is with financing. The odds are that if any of you have read or looked into Latin America at all, what you'll see is talk about huge pipelines in these different countries. Chile has 15 gigawatts of approved solar power, and someone inevitably will ask the question, like, why isn't that a 10 gigawatt market? And the one-word answer generally is just, financing. But a lot of times people don't dive into just like, what is it about financing? Like, why aren't 10 gigawatts worth of projects getting financed there? And that has to do with both the providers of capital, the amount of capital that's available, and the cost of that capital. So to date, the primary source or providers of capital have been development banks who see their role as kind of stepping into the market, assuming some of that first mover risk, financing projects to jumpstart both the solar market and also to help commercial and private lenders just get more interested in financing solar in the region. And so they viewed their role not as a long-term one in the Latin America region, but as a way to kind of get things going and then hand it off to private and commercial lenders. So right now, and so that, although that capital was relatively cheap, there just wasn't very much of it available, right? I mean, development banks were not going to finance a 10 gigawatt pipeline in Chile, or they weren't going to finance, a 1.2 gigawatt market throughout the entirety of Latin America, and they won't continue to do that every year. So we're seeing a shift from about who's providing this capital over the next few years. And as a result of the fact that the providers of capital are changing, the amount of capital that's available and the cost of that capital is also going to change quite a bit as well. So we expect that as development banks pull back, we'll either see commercial banks start to fill that space or not, which means that there will be either the same or slightly less capital available to finance some of these projects. And also that the cost of that capital may get a little bit higher as commercial banks still start to get comfortable with financing solar projects in the region. The other thing about financing that's worth mentioning is just the role of financing in the distributed sector. So in places like Mexico and Brazil, where there's really strong fundamentals for DG, one of the things that's kind of just holding the market back from absolutely taking off would be the ability to provide financing to people who want solar panels on their house. And I won't belabor this point. For anybody who's worked in the US market, it's kind of there's an obvious story here, which is that there's plenty of people who want to go solar, but they just don't have the money to pay $40,000 to go solar right now. And so what can you provide to help those people do that? There's some unique challenges to providing those kind of leasing structures in Latin America, in terms of determining the creditworthiness of those off-takers. Credit reporting, things like that are just not as prominent or as reliable. And so there still is some hesitance, I think, for banks to be willing to put the capital behind those projects. But the flip side of all of these threats and challenges, of course, is that all of them are also opportunities, right? So if more of that kind of capital goes into the distributed segment, we will see those markets take off in a real way. The next challenge is with off-takers. There's the easy story to tell about the off-taker challenge, which is just that there's a need for more market education, which is always true in any kind of an emerging market. But the other thing is that there's some kind of just unique challenges to the off-taker market throughout Latin America. And so just to give a few examples, the mining industry in Chile is one that most people talk about, they're really excited about. But the truth is a lot of these big mining companies do not want to sign a 15 to 20-year power purchase agreement. And the reason is that their operations are kind of cyclical. So if whatever commodity they're mining, if the prices crash, they want to be able to shut down operations and wait until the prices come back up before they start operations up again. They do not want to be locked into a long-term, relatively expensive power supply agreement when they're not doing anything, right? So they are very, very hesitant about signing these longer-term contracts. And we've seen some solar developers kind of just get around this by doing much shorter-term contracts. But we've also seen developers who have just gotten burned by those fluctuations. So there's an 8.8 megawatt project that was supposed to supply an iodine mine or an expansion to an iodine mine, but then prices for iodine declined pretty rapidly and the project got delayed. And so that's just a good example of the kind of the risk, one of the risks that you get involved with it when you're in the market. In Mexico, another example would just be in Mexico, a lot of people were looking at municipalities as off-takers, and there's projects that are looking at using municipalities as off-takers. And there's just been some questions about the creditworthiness of kind of the local municipalities and the ability to pay that debt back over the long term. The third category is market risk. And the reason that I wanted to break this out as kind of a separate category here, although it obviously very heavily influences financing, it very heavily influences the off-taker market. But the reason I wanted it to be separate is just because Latin America is exposed to a lot more market risk than most other solar markets are, just by virtue of the fact that it's an unsubsidized market. So in a subsidized market, you are exposed to a lot more policy risk. In an unsubsidized one, you're exposed to a lot more market risk. And one just example of this I've talked about a little bit already is kind of the commodity risk. So if you're a merchant power plant and you're selling your power into the market and it's pegged to whatever the spot price of electricity is, then you have some uncertainty both around the volume of power that you're going to sell on a given day and the price of what that power is actually going to be. And that just creates a different kind of risk profile for the project when you're going to get financing and also when you're looking at your revenues over the long term. And that's something that solar developers aren't really used to being exposed to. So that's something that just has to be factored in if you're looking at getting into that kind of a business in Mexico or in Latin America. The other one is hydrological risk, which is a fancy way of saying, is it going to rain or not? But in times when there's a lot of rain, like what we've seen in Mexico, the wholesale power prices have come down dramatically as they rely a lot more on hydropower, and that creates some hesitancy for both the financiers who are looking at these projects and for the projects themselves in terms of whether or not they're going to be able to meet their revenue targets. This can also swing the other way, which has done in Brazil, where there's been a massive drought, which has made them really rethink how reliant they are on hydropower. Basically, there was a massive drought, which led to relying a lot on thermal power, which led to a massive government bailout, which led to massive rate hikes. And so now they're kind of like, maybe we should have had more solar to begin with. And so they're kind of rethinking that whole process a little bit and diversifying their portfolio. And then the last one is currency risk, which is probably more prominent in places like Argentina, but is definitely something to keep in mind in some of the Latin American countries outside of Mexico and Chile. Policy risk, this is one that everyone's pretty familiar with already. Some of the market is still tender dependent in the Caribbean and Central America, so if those tenders for some reason don't come through or if they're not agreed to on the terms that solar developers need, then we'll see that part of the market dry up a little bit. There's a heavy tax burden in places like Brazil that really cuts into the profitability of power plants, developing power plants there. And in Mexico, there's an import tax on non-free trade agreement modules that's influencing the market somewhat as well. And lastly, there's just always the potential for new laws. So we're seeing in Mexico that energy reform is passing. It's going to be good for solar. It's creating a competitive electricity market throughout the whole country. But there's just some uncertainty around how it's going to be implemented. And so that's something that developers are aware of or companies are aware of when they're operating in that market. And then the last one is country risk. I think a lot of that boils down to just the recourse that you have within the legal system. One of the reasons why Mexico, Chile, and Brazil we think are kind of the primary markets is because those have the least amount of country risk out of a lot of the places in Latin America, with the most country risk probably being centered in Central America at the moment. But again, not a whole lot to really talk about here, just something to be aware of. And I'm also running out of time. So the last one, I just wanted to talk about what's next. What should you expect if you're kind of getting involved in the market and you want to be thinking about it long term? The way that I see the market has kind of developed up to this point, we had this period of time between 2011 and 2013 where the market was really finding its bearings. So what we saw then was that falling technology costs and the beginning of a lot of new regulatory mechanisms kind of sparked the market. It transitioned from being mostly off-grid to being on-grid. We saw a few tenders. We saw a few pilot projects kind of getting passed. And a lot of that was just about testing out what is it like to develop solar, or what's it like to integrate solar in Latin America. The stage we're at last year and this year and potentially a little bit into next year is kind of the picking the low-hanging fruit phase, which I see as companies moving into the space and finding where can I get the highest returns right away. And that doesn't necessarily mean having a strategy that you can scale and replicate across a bunch of different geographies. It just means finding the spots where there's the best opportunities in the immediate term. And that's obviously being driven by the combination of high installation levels, high power prices, rising demand, off-takers who are really willing and really interested in solar, and still being financed largely by development banks. The part that I'm really interested in, and I think is where we kind of are planting the flag a little bit on what we think is next for Latin America, is really unlocking the market potential in Latin America and developing business models that are based on the fundamentals that we see in Latin America, the relatively strong fundamentals that we see there. And so what we see as being a few kind of characteristics of this next stage of development will be having innovative market-based business models. So that means structuring contracts in new and creative ways to accommodate the unique needs of off-takers, and building in more things into the way the project is structured to acknowledge the way that financiers are looking at these projects. Developing strategies that are scalable, so not just finding one-off opportunities, but really thinking about how companies can broaden their base and access, in places like Mexico and Brazil, this massive population of people. Bringing lower cost capital into the market and also financing and structuring deals in new ways, as I mentioned earlier with the distributed market. And then lastly, how to broaden the off-taker base, so both in the distributed segment and in terms of like a lot of the bilateral contracts with utility scale. And so this is where we see this kind of idea of broadening the off-taker base and strategies where companies can really start getting things to scale, where we see the potential for companies like Solar City to move into Mexico and just take over, right? Because there's a real opening for that kind of a business model in a region like that. And there's a real opening for coming into a market like that and thinking, how can I provide power to 18 million people instead of just 500,000? So that's the kind of thing that one of the kind of things that we're expecting to happen over the next few years. I think we are right out of time in terms of getting any questions, but please feel free to come up and ask me anything throughout the rest of the day. Definitely appreciate all of you being here this morning. And with that, we'll call up our first panel for the day. Thanks.